So you buy a property, you flip it and make 50 grand. That's the dream. But here's the nightmare. You buy a property, it sits empty for 3 months waiting on permits, a pipe bust, and the insurance company denies the claim because of a vacancy clause. Now you're holding a gutted house with water damage and your profit margin is completely gone. Real estate insurance in Texas is a different animal because of our weather and our laws, right? In this video, we're breaking down the 10 specific insurance traps that real estate investors fall into, from the roof to the rent checks, so you can protect your ROI. We use the term builder's risk a lot in the agency. What does that mean? Who would be a client for builder's risk?
The builder's risk is what we put in place when you are building a new construction. You're typically going to be doing this on a vacant lot. It does make things a little bit more difficult if you're trying to add in demolition. So just keep that in mind. But to start out with just your builder's risk, we are going to cover your theft of building materials, the materials in transit, and the increasing value of the home as renovations progress. So a lot of times we're going to get asked all the time, can I just do my builder's risk problem based on my loan? No, we've got to go off of what the cost of the new home is going to be. That way we have you insured correctly. And of course, builder's risk can be from 3 months, 6 months, 12 months.
Oh, so you can adjust my term to whatever the project's going to be. Is that kind of what you're saying? So if my project's 3 months, then I can buy a 3-month policy?
Yes. So if you start out and you buy that 3-month limit policy and we look back at almost the end of it and you're nowhere near done, we can add to that. So we typically try to be conservative on that because if you pay for 6 months, a lot of times you're not getting money back if you finish up in 3 months. Mm-hmm. So just like anything else, we try to estimate. We're doing our best to make the best guess on what it is that we're doing in the insurance world, but we do want to be a little bit conservative on that. And so go for that 3 month. If we still need to add time, we'll add time.
Nancy, I've just bought my dream building, but it needs a lot of work. How can I structure that? Because the building's not worth very much today, but when I finish it, it's going to be worth a lot of money. With builder's risk, how can I structure that with you guys?
We're going to start out with getting you coverage on the value of the building today. Then we're going to start our builder's risk. And that builder's risk, again, is going to cover that materials, the work that you're doing on that. And then when we're finally done with all of that work, we're going to reevaluate that brand new office that you have that looks amazing. And we're going to get it covered for that value, for the value that it is now after you've finished that renovation.
Nancy, we see this all the time. Client comes to us and says, hey, I've got a building, it was leased, but I just haven't been able to find a tenant, and I have insurance on it now. Can I just keep that policy?
Your tenant has moved out. You don't know how long it's going to take someone to come in there. Should I just keep it there, leave it alone? The question is, are you going to get that tenant in within 60 days? Most of the time, they will give us 60 days to get another tenant in there. If you're not, we need to move it to vacancy because a lot of those underwriters, like we've said, they hate vacancy because nobody's in there checking on the bill. Somebody doesn't see the vandalism going in there, the broken glass, all the things that can happen in a vacant building. So we need to make sure that you are covered for that because let's say somebody breaks into that home and you haven't changed it to a vacancy, then you may potentially not get your claim paid if somebody did break in and stole all your copper and vandalism the whole building. So we want to make sure that within 60 days, if you're staying with the same tenant or getting a new tenant, you're great. If it's not going to be within 60 days, let's play it safe and let's write them a vacancy policy.
60 days. So, yeah, standard policies automatically reduce coverage after 30 or 60 days. So Nancy, I own a building, and this is phrased another way. So, Nancy, I own a building, and I lost my tenant about 30 days ago. It's currently insured with one of these name brand carriers. Do I need to talk to my agent about that?
Absolutely. If you have any concerns about how long it's going to take you to get a new tenant in that building, we need to look at that. Typically, that's within 30 to 60 days that we need a tenant back in place in order to stay on their current policy. Now, if somebody's moving in next week, we're good. But again, if it's going to be a prolonged period, then we need to go ahead and get them on a vacancy policy.
Okay. Hey, Nancy, I own a commercial real estate that I lease out to tenants, but my tenant, unfortunately, couldn't make the rent, so they moved out about 45 days ago. Can I just keep the same policy, or what do I need to do there?
Absolutely. That's probably something that you want to reach out to your agent on this. Your policy will have what is included in there is called a vacancy clause. So once you do not have a tenant in there and there's nobody, in that building all the time, going and checking it on day to day, they're going to apply to this vacancy clause. And that's where we're going to see things that are not covered, such as your vandalism, broken pipes, broken glass. But those are all put in that vacancy clause. And so that's when you really want to talk to that agent and make sure that they have updated your policy.
Nancy, in Texas, hail is our biggest enemy. I own a commercial building that I lease out to people. Man, my roof's about 15 years old. If we get a big hailstorm, do I get a new roof?
Well, Jens, you're right there on that bubble. Typically, if we're looking at a 15-year-old roof, we're looking at that to be actual cash value. It's very hard to get that in Texas at a replacement cost value. So basically, an actual cash value is going to look at that roof and it's going to say, oh, this is 15 or over. We're only going to pay him what that roof was worth, less the depreciation. Now, if you were newer than 14 or 15 years and stuff, then we're looking at replacement cost, and they will cut you a check and give you a brand new roof. So that's the big difference between the two. Actual cash value, it's just paying you what that building was worth, less depreciation, and replacement cost is paying you for a new roof.
I own an apartment complex, and I have this problem tenant. They actually left a candle burning in the bathroom. Lord knows what was going on in there. But it caught toilet paper roll on fire and burned the building. Do I have any coverage typically on my policy that would cover? I'm not going to be getting any money from those renters now. No, everybody was okay. But do I have any coverage to help me pay the bank, my note? Because I don't have any rents coming in now.
That is where we look for what we call loss of rents. So basically, that is the scenario that you're exactly talking about. All of a sudden, you have to move all those tenants out, but that bank's not saying, oh, you don't have to make your mortgage payment. I'm sorry, nobody's in there. So that's why you need that lost rent, so that when you are not getting money coming in, you are not defaulting on your loans because you can no longer make those payments. So that's where loss of rents comes in place.
Okay. Is it automatic on my policy, though?
No, absolutely not. That is definitely something that you want to look closely over the coverages and discuss that with your agents about that. And they can help you look at loss of rents. That can even be written as 6 or 12 months periods because, like you said, here in Texas, we're always talking about our roofs. If your roof is gone, it could take a year to get it replaced if this is a large, big apartment complex around here. So yeah, you want that 12 months. But then sometimes it might be something simple. Hey, we've had a flood in there or something's gone wrong and we just need 6 months of loss of rent. So those are the different conversations you'll have with your agent to determine what is best if you want a 6-month policy or a 12-month policy.
We just had this big rain in San Angelo, right? And
Yeah.
we had people that unfortunately victims to this, right? Water got all in their buildings and their houses and things like that. I know that policies have water damage coverage. Wouldn't they be covered?
There is a big difference between flood damage versus water damage. So yes, most people automatically assume, they're like, oh, I see water damage on my policy. I'm covered. I'm great. No, that's covering you for broken pipes in your building, something like that. When it's a natural disaster, such as what we saw in San Angelo and around here with a flood, like that is not covered. So you want to have a separate flood policy for that. And water damage is just what it says it is. It is water damage inside that is covered in your dwelling or your commercial policy there.
Ah, so it's basically water that originates inside the house, and then flood is like water that comes from outside the house.
Absolutely. Yes, sir.
Okay. Hey, Nancy, I've heard a bunch about umbrellas, and I think that's, a lot of people get this in their mind. That's a catch-all. Like it just covers everything, right, if you've got an umbrella. But tell our listening audience exactly when do they need an umbrella and how does that work for them?
The short way to look at that is to say if your assets exceed your general liability, then you need an umbrella. Now, that means let's say that you are an investor and you have $3 million in liabilities spread out over several properties or whatnot. you have one lawsuit and it's coming at you for $3 million, $4 million, that's where you need that umbrella, because that $1 million, $2 million that you have on your liability is not going to be enough. And the rest of that is coming out of your pocket. And that's where you lose all of your money and could potentially go into bankruptcy. So you want to make sure that if those assets are, above that liability limit, so let's, like I said, over, say, $1 million, $2 million, it's not going to cover you on a lawsuit versus what you have, then you definitely need an umbrella.
Okay. So if I own, say, an apartment complex, what could trigger me actually needing that kind of limit? I can't imagine me getting $1 million claim for liability.
Let's say you've got 60 tenants in that apartment building, and all of them can come up for some reason to sue you. We know this society where people are just easy to sue, whatnot. They could sue because they're falling in the bathtub. They can sue slips, trips, and falls, anything like that. You have enough of those, and you've got 60 people that have a chance to sue you in one policy period. I can guarantee you're going over that $1 million per occurrence and $2 million per aggregate. So that's why you want to have an umbrella that's going to cover you for all of that liability over those 60 apartments in the one building.
Okay. So, hey, Nancy, I've got a couple of apartment buildings, and they're probably valued at $5 million each. So what umbrella do I need? You said I needed general liability. What umbrella do I need?
Okay, perfect. We want to look at your total assets. So if you have $5 million on each building or thereabout there, then let's have a $10 million umbrella on there so that we cover you adequately for the liability that you face against that situation.
So basically what you're saying is if I have a lawsuit, maybe a fire, and somebody gets seriously injured, or maybe multiple people, that I have to either pay out of my pocket or the insurance company's going to pay, right? And so it sounds like that umbrella would step in then?
Absolutely. That is where your umbrella comes in there, because you're going to obviously exhaust your liability limit. So that umbrella sits over the top of there. So like you're in your example of, say, a fire like that and people can be hurt, anything like that, yes, you definitely need that higher limits of your umbrella.
We want you to focus on the deal, not worrying if a hailstorm is going to wipe out your profit margin. If you're building a portfolio, you need an agent who understands the difference between a cosmetic flip and a buy and hold rental. If you're not sure if your current policies have actual cash value or replacement cost, or if you've moved properties into an LLC and have not updated your insurance, let us know. We can do a portfolio review to make sure your coverage matches your business strategy. Check out the links below to connect with us, and thanks for watching.